When it comes to the Toronto real estate market, there's often common misconceptions that we hear from new investors. So today we're going to clear things up. We're going to be diving into these myths right here. And if these are on your mind too, keep watching because we're going to help you make smarter investing decisions in Toronto. If you're new here, I'm Samantha Chan from Elevate Realty, and our Toronto real estate brokerage wants to help you make smarter real estate investing decisions in Toronto. Don't forget to like and subscribe if you enjoy our content. Let's begin. Here is myth number 1. Toronto's income properties are way too expensive. It is true that Toronto real estate can be pricier, but after the COVID price jump outside of Toronto, combined with higher interest rates that took all real estate prices down, the price gap between Toronto and outside of Toronto has actually compressed quite a bit. You can now find a Toronto house with 2 units or more for less than $1 million pretty easily, especially in areas where rental numbers make more sense. We're talking $900,000, $800,000, and sometimes even lower than $700,000 if you're willing to put in bigger renovations. And because there are more renters in these lower priced Toronto areas, you end up not needing to pay the typical hefty premium that owner-occupiers do. Add this to rental rates not varying all that much across the city in Toronto, and you end up getting better rent yields predominantly in rental neighborhoods in Toronto. Now, another thing to keep in mind is that lower priced homes often do have more room to grow in value. So let me show you this chart. Basically, when prices are lower, more people are able to buy them, which ends up driving up prices more over time. But I'm not saying that you should invest in areas that are well underdeveloped because demand will drop quite drastically there too. Our favorite strategy for maximizing investment returns would be to invest in neighborhoods that are just starting to pick up and improve. Now, during this time, property values might end up rising much more quickly than average until they catch up to more mature areas. So once you combine this with better rent yields too, you end up being more likely to come up on top with better total real estate investment returns in Toronto. Now on to myth number 2. Toronto's strong appreciation days are over and there's better growth potential outside of the city. Now that is very far from the truth in our opinion. Canada has ambitious immigration plans and the supply of new housing isn't keeping pace. And in fact, the gap has been widening lately according to this recent report by National Bank, where it shows the situation is getting a lot worse with only one housing start for every 4.2 people entering the working age population compared to the historical average of 1.8% just a few years ago. Toronto will feel the impact of this way more than anywhere else because more residents and newcomers to Toronto would still prefer to live in Toronto for its job opportunities, entertainment options, and vibrant lifestyle, and this trend isn't changing anytime soon. But it's not just about the slow pace of home construction in Toronto. The real issue we have here in Toronto is the lack of new land for new homes, making it extremely tough to create more housing units even if you have the money. And because of this bigger imbalance between supply and demand in Toronto will continue to drive prices higher and keep Toronto's growth pretty strong. And also because of this very reason, we can expect to see more investor-friendly housing policies in Toronto that make it easier to create more new homes on existing lots. So if you do decide to invest in these housing creation projects, you can potentially see big improvements to your rent yields, and on top of that, also a potential big value add bump too. Now let's tackle myth number 3. Investing in old houses is a bad idea. Well, structurally, we would say they're actually pretty solid. They've stood the test of time for almost 100 years or more, and so the likelihood of them collapsing is actually lower compared to newly built constructed properties. From an investment standpoint, older houses actually make a lot more sense too. When you buy an older home, most of your investment dollars do go towards the land itself. The building holds less value when you buy it, and that results in lower depreciation over time as well, meaning you end up getting a better bang for your buck. Now, on top of this, owning land, unlike newer condos, does offer more flexibility in the future for development opportunities too, such as adding a backyard house or an extra unit or two to increase rental income potential. Now, while older homes may need more maintenance, with proper renovations and upgrades up front, they can stay in good condition for many years to come. Yes, it's true that houses will still need more property management compared to condos because many of the condo shared spaces are managed by condo management, but often for a high condo fee too. So going back to houses, if you do prefer a more hands-off approach, then you can always hire a property management team just like ours, and even factoring in those extra property management fees, multi-unit homes still offer better rent yields, making them a better investment choice overall. Now let's address the most common misconception, our last one: Toronto investment properties do not cash flow. The reality is that Toronto condos are currently experiencing deep negative cash flows. This is very true, but multi-unit homes in Toronto can still cash flow very well. Here's how the numbers stack up. With 2 units in a house, it's possible to break even on cash flows with a 20% down payment and current fixed rates at around 5%. Once you add another unit, 3 units, you can achieve positive cash flows. And if you have the opportunity to add one more unit or a backyard house, which is possible in every single house in Toronto now, and there's the potential for even more units coming soon, cash flows can actually be very impressive. I hope this clears things up for you. And if we've convinced you to think more about investing in Toronto real estate and you want to know more about the current opportunities and how the numbers work for live deals, just get in touch with our team. We're always on the lookout for the best deals in Toronto, and every week we're excited to share them with you once you reach out to us. We're not your typical real estate sales brokerage. Instead, we focus on using numbers to make better real estate decisions in Toronto. And that can mean looking for stronger investments with positive cash flow, thinking about risk management, and looking for ways to boost returns like value add renovations and gentrifying areas. If you do want to discuss your private real estate investing situation with us, just head over to this link to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think someone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye.